Welcome back to Global Value. Today we are going to be looking at Diageo, ticker symbol DEO on the New York Stock Exchange. We will be doing a stock analysis of Diageo, looking at how the financials of the company can tell us how the business is fundamentally performing. Before we get into the analysis, let's remind ourselves of the 4 value investing principles. 1, when you're purchasing a stock, you're really purchasing the underlying business. A stock is only going to perform as well as its underlying business over the long term. 2, Mr. Market is there to serve you, not to inform you. 3, with any investment, you need to maintain a large margin of safety just in case you're wrong. And 4, to minimize the chances of being wrong, you need to stay within your circle of competence. So let's get into it. Diageo is currently trading at $209 a share. Over the past year, Diageo's price has increased by 20%. Zooming out over the past 10 years, Diageo has returned a compounded 7.5% return. So looking at the highs and lows, Diageo currently at 209 is closer to this 52-week high. 52-week low is 175, so some volatility there, not a ton. Its market cap in British pounds is 91 billion British pounds. In US dollars, that's about 121 billion US dollars. Let's understand a quick background of the company. Diageo, together with its subsidiaries, produces, markets, and sells alcoholic beverages worldwide. Diageo is the product of a merger between Grand Metropolitan and Guinness in 1997. It is one of the world's leading producers of branded premium spirits, approximately level with Moutai in terms of revenue. Diageo produces and markets wine and beer as well. Its premium spirit brands include Johnnie Walker, Smirnoff, Kettle One, Crown Royal, Ciroc, Captain Morgan, Tanqueray, Don Julio, Baileys, and Guinness. Diageo also owns 34% of premium champagne and cognac maker Moet Hennessy, which is a subsidiary of French luxury goods maker LVMH, Moet Hennessy Louis Vuitton, and a near 55% stake in India's United Spirits. The company has operations globally. It was incorporated in 1886 and is headquartered in London, England. So let's get right into our analysis. For whatever reason, ticker is a little wonky with Diageo's PE, so we're looking at the total enterprise value divided by the EBIT over the last 12 months. This is going to serve as a pretty useful proxy instead of PE. So for pillar 1 for Diageo, we want this total EV to EBIT ratio to be below 22.5 over the past 5 years. And we see that it barely sneaks in at 22.3. Currently, it's trading at 24.85. So although it's currently a little higher, this is going to be a check over the past 5 years. Next, we're looking at the average 5-year return on capital for pillar number 2. We want this to be above 9%. So looking at Diageo over the past 5 years, we can see that they returned 15.3%, 16%, 16.6%, 12.6%, and 14.7%. So they have returns on capital averaging in the mid-teens over the past 5 years. Averaged out, it actually comes out to 15%. So that is a check mark there on pillar number 2. Moving on to the income statement for pillar 3, we're looking for 5-year revenue growth. So over the past 5 years, Diageo has grown from $15.7 billion in US dollars to $17.6 billion. So that is a check on pillar number 3. Scrolling down, we will look at net income. In 2017, Diageo had $3.5 billion in net income. In 2021, they had $3.7 billion in net income. So that is going to be a check as well. So far, so good. 4 checks on Diageo. Pillar number 5, we're looking for a decreasing share count over the past 5 years. So in 2017, Diageo had 2.5 billion shares outstanding. And in 2021, they had 2.3 billion shares outstanding. So that is another check there. That's good. They're buying back shares and increasing your ownership percentage in the business. So that's always great to see, provided that they were buying back shares at a reasonable price. Pillar number 6, we're looking for 5-year free cash flow growth. In 2017, Diageo had $3.4 billion of free cash flow. In 2021, they had $4.2 billion of free cash flow. So that is going to be another check there. Guys, we have 6 checks in a row. Filling in these in-between years, in 2018, they had $3.3 billion in free cash flow. 2019, it was also $3.3 billion. And in 2020, they had $2 billion. This averages out to $3.25 billion each year of free cash flow over the past 5 years. We're going to need this free cash flow number for pillar 7 and 8. Pillar number 7, we're looking at net debt and we're comparing it to that 5-year average free cash flow number multiplied by 5. So Diageo has $17 billion in debt right now. Multiplying their $3.25 billion of free cash flow each year times 5, that comes out to $16.2 billion. So that's going to be our first X on pillar number 7. They have a little more debt than we'd ideally like to see, but that's not too bad of a miss there. Finally, pillar number 8, we're comparing Diageo's market cap to that 5-year average free cash flow multiplied by 20 to give us a starting point of what we would reasonably want to pay for the business. Diageo has a market cap of $121 billion. Multiplying that $3.25 billion a year of free cash flow times 20, so about half of what the current market cap is. So that's going to be another X there. So in summary, Diageo has 6 out of 8 pillars. They are a great, stable business with some very strong alcohol beverage brands that are not going away anytime soon. The company just looks a little expensive, and it has more debt than we'd like to see. In all likelihood, it is manageable. Diageo is in the Fundsmith portfolio managed by Terry Smith. At the most recent Fundsmith annual meeting for 2022, which Terry Smith presented online, he talked about Diageo. Terry Smith's thoughts regarding Diageo were that as international travel continues to rebound, Diageo will continue to see a rebound in their sales as well. Another thing to note is that in an environment that likely has rising global inflation, Diageo will most likely be able to pass along additional costs to their consumers because of these brand name alcohols that likely have pricing power. One way we can actually look at that pricing power, even though this isn't one of our 8 pillars, is to look for stable gross margins over time. So over the past 5 years, Diageo has had a very, very stable gross margin of about 61 to 60.5%. That is it for today's stock analysis of Diageo. Hopefully you learned something. If you enjoyed the video, please be sure to like and subscribe, and make sure you comment down below both what you think about the company and what company you want me to take a look at next. Thanks for watching to the end of the video.